Hi, I'm Peter Rose, founder of Longwood Currency Trading. It's, early to mid-February of 2024, just to put context in it, because it feels like I'm in a FOREX drawdown. I haven't been going along quite enough yet to determine whether I'm sinking in quicksand or whether I'm just going to get scuffed up a little bit, because I keep coming back. Again, we're in February. I had, the early part of Feb, I was up, the first week I was up about $10,000 in trading, which, is about 8%, 9% on my account. And then I ran into 2 days of vigorous trading where I had about 6 transactions, and obviously the majority of those didn't work out because I was down $3,500. Yesterday I was up $3,000 in I think it was 3 transactions, and one of them was a $500 loser, $600 loser. So over the downfall of stuff, I guess you'd call it, I'm probably about $300 up from where I started having losing transactions, which I don't have very many of because I've got a high win-to-loss ratio, except I'm trading with a relatively large lot size, and I'm doing a lot of building and staging, and there's a lot of finesse in that. If you're an all-in, all-out trader, you pick your point to go in, you drop your load, and you're either out right away with the whole thing or you let it all run. When you're staging and when you're building positions, you're throwing light positions on. Excuse me. For example, I might throw a trial position of about 3 lots in and see what happens. If that doesn't go good, I'll pull that out after a 5-pip loss or 10-pip loss. And then if price comes back, I'll get back in and it'll go forward, and maybe I'll drop another 3 on it. And then it'll reverse and go against me, and I'll drop 3 pips on 6 lots. And I'll go back in and I'll make maybe 7 or 8 pips. And so over that transaction period, I might have lost 3 or 4 times, but the 2 times that I win, I'll do really well. That's what's happened recently. In the big picture of things on a daily basis, if I were to make, or over the course of, let's say, 3 or 4 days, and making a series of transactions where I've got enough to have at least 10 transactions involved, I'm probably about a 70-30 trader on the transaction basis, but I'm about 80% on the winning rate for a daily result. Until recently, I've traded, I think 5 days, and I've had 2 down days in 5, so I got 40% losers here. So I'm 60% on a daily basis as opposed to the 80%. One of those days was a $500 down day, and the following day was $3,500 down. So there was 2 losing days. One was only $500 and the other was $3,000 to give me that $3,500 down thing. So what's causing that? It's easy for me to see now that I have enough data to look at it because of the metrics that I have. And I use 4 metrics, and most people just use these metrics as ratios. I don't. I convert them into equations so that I can play with them and determine what I can change if I needed to change, and what does the trading itself reflect that's not working in the equation to produce the ratio that it comes out right. In other words, if I have a transaction win-to-loss ratio of 70-30, and I'm looking at my process, and I say, oh crap, I'm running, basically jump ball or 55-45. What happened? Why is that? Now, if you don't understand how to construct your trading plan with all the moving parts to an entry analysis that goes into it, then you really can't look at that win-to-loss equation and say, well, it's probably because of this. I can do that because I have limited the number of variables that go into the rules that I have. So if I'm following my rules and they go wrong over enough times in a sample size to say, well, wait a minute, this has screwed up my running values for my win-to-loss ratio on a transaction basis, or maybe on a daily basis like they have now. If you just counted up the 5 days that I traded, and I'm down from an 80% daily win rate to a 60% win rate. That's a huge drop. And because of this lot size that I trade, it results in thousands and thousands of dollars. I have a running loss position right now of $4,000. I'm sitting here drinking coffee, standing here, and I have a $4,000 loss. And I'm not going to go in there and sit there and second guess the decision that I made, because that's where you start making errors. You start losing, and you say, oh, I've got to cut these trades really short. I've got to change the way that I trade. As soon as you do that, you're just propagating, more transactional loss. And if you get into a rut, you call a drawdown rut, over just the course of a day, if you're making multiple trades a day, which I tend not to do, I trade between 1 and 3 times a day. And again, it's because of the position size that I'm working. I'm probing the market. I may do that 2 or 3. I might do it 4 times before I get it right. Or if I didn't get it right and I'm ready to go into the 4th time and there's no real trade there, or I'm just going, Jesus, I'm just not hitting it today, I got a down day. And hopefully that down day, if I'm going in with a 5 lot and probing with a 5 lot, for example, $50 a pip, I'm losing $10. I'm losing $500 a pop. So I'm 4 tries at 500. I'm $2,000 down. And if I look back in my daily performance register, most of the down days that I have are $2,000, $2,500, $3,000 down days. And those represent 3 failed attempts to get the thing right. Because I may have built my position from 3 or 4 lots to start to 8 or 10 lots or more, and the thing goes in the building stage. It reverses on me. I did it wrong. My average position value is too close to the current value, and it slips over there 5 or 6 lots, 5 or 6 pips, and you're carrying a 10 lot at $100 a pip, and you're a lot of money down at $100, at $100 or $150 a pip, just a few pips. That's a lot of money. So if your methodology of trading, if you don't have a real handle on what the rules are addressing in the trading that you're doing to the market, in other words, what are the direct conditions of the rule in the entry analysis phase? What are those conditions? What are they based on? And are those conditions significant enough that if those conditions aren't there and you violate that condition, then it will change the win-to-loss ratio or average win value or whatever it is, that metric it is that you're looking at. So I have enough data now where I'm looking at it and I'm saying it's either I'm doing something wrong or I'm in a statistical downdraft. I realized that yesterday, and so I've tended to trade more. I think I had, well, I said 6 transactions yesterday, probing and going in and out and all this other kind of stuff, and ended up $3,000 up for the day. Well, it was I was up $3,500 for the day, and then the last trade that I made, I dropped $600, and so that brought that down to the $3,000 up day yesterday. And I had a continuation trade after I took that $500 or $600 loss. So I went in light. I went in with a 3, and then it jumped to a 6 lot as things went on. And the end of the day came. It was time for a glass of wine and play some backgammon with my wife. And I'm gonna just do a carry trade. I was basically, the thing was running back and forth between $300 or $400 up to $400 or $500, $800 down. It was in a jagged position, and the reason for that was because the U.S. was having some economic news releases at 8:30 this morning, and so last night everybody's going, we're just going to remain slow and hold things off. I got up at 2:30 in the morning. I'm at East Coast U.S., so you get up at 2:30 in the morning to catch the London Open, and man, things were just going crazy. And the position, which when I went to bed had been down, I think $1,200 or something like that, was now positive 500, and it had kicked off another limit order. So I've got 9 fulls on this thing, and I should have just exited the trade. That's what I should have done, because I could have grabbed, I don't know, it went from, when I was looking at it, was $500, then went $300 in my favor, and then it came to, it was $500 in my favor, then went to $300 down, and blah, 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 blah. And it was settling around the $80 to $150 thing. I should shut this thing down. I don't get a very good percentage return on the size of the 9 fulls that I'm carrying, but that's okay. I'll shut her down, and then I'll pick it up in the morning. But knowing, and this is where my failure was, knowing that there was going to be economic news released today, not only from the UK earlier in the day, but also some employment figures from the US that would be fairly significant, and I have a fucking opinion as to what those are going to be. I'll just hold the thing overnight, and we'll just go balls to the wall from there. And when I got up this morning, it was about $1,500 behind to $500 behind. The news release was at 8:30, and the price shot up 40 pips, just like that. Just went right against me, and went to $5,500 behind. And I'm just holding on because I know how these things go, and things will settle down. They did. It came back, so I was $2,600 down. Then it's fluttering around, and it's about $4,000 down. It's behaving the way I would expect price to behave based on an economic release and where I feel that price is really going to go. And I have a significant profit target that I have because I went into the carry trade and changed the short profit target to a longer profit target because I'm extending the parameters of my trading, which my rules allow me to do. However, my concern this morning is I'm looking back in the historical process over the last few days of trading, and I'm seeing more negative transactions than I would normally like to see. Even though most of those days came out positive, I'm trading more and taking more negative positions in order to get that one big one that accounts for a $2,000 day or a $1,300 day or something like that. So my metrics are showing me where my rules are running into problems, and that this is not a statistical, just a normal statistical things. You're going to lose 6 times in a row. If you're an active trader, then within about 300 trades, I've got a statistical probability that I'm going to lose 6 times in a row. Okay, well, I trade actively, and so at some point I'm going to hit that. I haven't hit that in quite a while. I've hit it on a transaction basis again. On a daily basis, not so much, because again, I was at 80-20 positive on the daily, and so I'm still projecting that the win or loss is still holding up around 70-30. Although the win to loss could be down at 60-40 or 55-45, but I'm getting massive wins when I win. So there's another metric that tracks that, and that metric is way out of line with my normal trading results. And I'm just reflecting back on that this morning, and I'm saying there's a problem in the trading, not the statistical likelihood that I'm going to realistically expect. There's an issue in the trading. Now I got to figure out what that issue is. So I can't do that right now because I've got to focus on what I want to do with this rabid trade position that I'm in. That's $4,000 underwater, and I'm going to have to work with this through the course of the day and determine, do I want to take $2,000 or $3,000 or $4,000 hit again, like I took a $3,000 hit and then I made $3,000 back. Do I want to take another $3,000 or $4,000 or $5,000 hit and then spend the next rest of the month making that money back, changing the parameters that I got to change? Or is the grand magic juju trading sauce going to work out for me? I'll hit my big profit target, or maybe I'll get 3/4 of the way there and I'll have a good win. That will bring up my winning percentage against risk for the month. It will bring that back up. Right now, without the $4,000 down, I'm about 13% against risk up for the month, and I'm 13, 14 days into the month. So that's not bad. What I expect to make on a monthly basis and what I do make and all that other sort of stuff, that's a whole other video, and it's not relevant for you guys because it's specific to the size of bank that I'm trading at any given time, which changes how I'm building my positions, how I'm staging in, and all that other kind of stuff that only comes into play when you're doing consulting with me or you're taking a course or something, so you can see the whole process laid out. It doesn't do me any good to say, well, this is what I did, blah, 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 and you're going to be able to follow that as a track, because I don't believe in that. That's following what somebody else is doing. That's not what we do. That's not what you're supposed to be doing as a trader. You don't follow what somebody else does. And if they don't know how to teach trading, then you're stuck, because you're constantly going to be able to do what the person is telling you that they're doing. And what they really should be doing, if they knew what they were talking about, which is what my strength is that I teach trading. I don't teach a system to follow. So that when somebody gets done working with me, they should have the ability to trade, not worry about what I'm doing. In any event, I feel like I'm in a drawdown period right now, but it is not because of a statistical probability that I'm in it. I'm doing something wrong. I think I know what that is. If that is what it turns out to be, I know how to fix it. If that isn't what it turns out to be, I know what the next thing is that it could be, and I will be working on both of those solutions once we clear whatever happens today on this trade. And who knows, I may have to carry this over. I may have to carry this thing overnight again, or I may have to carry it for 3 or 4 days for it to come out in the way that I feel that price action will ultimately go in. So now I'm going from talking like a day trader, or even doing some minor scalping, into talking about a position trader. I'm not a swing trader. I don't believe in that. Catch a falling knife, drop a dead big. That's just craziness. there's no way you can predict that, because what you're trying to predict is how much you'll win, and you can't not do that. So the whole premise of swing trading, in my mind, is invalid. I just trade. So I'm either going to trade, day trade, or I'm going to go into a position trade, which is why I extended my profit target a little bit. If I have to hold this trade over another day, I may go back in and adjust that profit target again, and I may adjust. I have plenty of dry powder that I can stage more lots into this thing. The question becomes, do I want to stage negatively, or do I want to wait for price to come around and stage positively? But then that reduces the average position value to where the extended winning value is, which, if you don't know what you're doing, you would then extend the winning value to keep the number of pips that you're going to make to maximize that trade. It's very mathematically clear as to how you're supposed to do this stuff. If you don't know how to do it, and the person you're talking to doesn't know how to do it, you're going to get stuck, because you're going to go, oh, I think I should do this. That's an opinion, and you should save your opinions for movie reviews. And if you look back in my my video catalog, I've done 2 extensive videos on save your opinions for movie reviews. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.